Hey traders, Raghee here, and in this recap video, I'm going to talk about time frame selection, especially as it pertains to intraday trading when a market sort of takes on more of a momentum type personality. And what I mean by that is when we start punching down to lower lows in a very fast way, so fast that you really can't see the organization of the, say, 5 or 15 minute quick enough so that you could start to take advantage of bounces, or the bounces don't come because the market's just pushing on the lows, it's just pushing on the bids, and we're just seeing that kind of acceleration to the downside. I mean, if you think about it here, 1, 2, 3, 4, 5 candles, and I'm thinking, all right, great, I've got 3 to 5 red grab candles. Where are my dots? Where's my bounce? Nothing, right? So when you see that happening, and you can definitely feel there's a certain acceleration to the downside, what you then want to do is just take a quick look at then the 3-minute chart and say, okay, I've got the dots, I've got red, okay, I can start to think about it short, but where's the bounce? And then you're saying, okay, well, we're at least getting warm, but I'm still not getting an environment that I can short in. So the 2 looks even better. Okay, got the 3 to 5 red candles. I've got, 3 8 EMA dots. I've got at least a nice string of at least 5 13 EMA dots. And by right there, I've got my 5th 21 EMA dot. Green is 21, yellow is 13, red is 8. So I've got that happening here. You think, okay, great, I need a bounce. And you're still noticing there's a certain, we're just pushing down through to new lows without a bounce first. And again, when you say, what do you mean by momentum, Raghee? That means that we're pushing down to new lows without any kind of significant retracement of the trend. We're just continuing to make new lows, no bounce. So then you go finally to the 1 minute. Now, I will seldom go shorter than a 1 minute chart. So this is kind of what we talked about in the chat room the last 30 minutes or so of the day. So again, you do your count, 3 to 5 red grab candles, then you need 5 dots. If it's 5 red dots, that means you're looking to short off the 8 EMA. If it's 5 yellow dots, it's the 13. If it's 5 green, it's the 21. And so when we get down to the 1 minute, by the time we have 1, 2, 3, all right, fine, and then I need 1, 2, 3, 4, 5. You can see here I marked it. At 22 minutes after the hour, the criteria for a downtrend clarity, right? Qualified. And then I've got an opportunity to start to short into whatever propulsion dots are lit up. Lit up means at least 5. And you can see we had a number of opportunities then after 22 past the hour. So being able to be nimble on time frames, looking for clarity, looking for the right market environment in order to trigger a trade is very different than what a lot of traders do when they're jumping the time frames in a market, because a lot of times traders will start to jump time frames in order to justify an open trade or in order to justify a particular position that they may have on. This is looking for clarity. So there's still a certain number of filters that and criteria that have to be met. Once they're met, we know that then that time frame is a viable, tradable time frame. So this is about how to manage multiple time frames and select the right one for the current market movement. In this case, again, when you keep pushing down to lower lows and you're not getting a bounce, and when you're pushing down to lower lows that are also pushing at your price movement range, right? So we know the price movement range minimum before I think I want to see a bounce is going to be 7 points. If I see 7 points to a new low and I don't see some sort of retracement, I know I'm in a momentum environment. And these are the kind of techniques that we talk about using hourly price movement ranges, understanding minor low moves, and also being very nimble, very flexible with the time frame as long as we know the clarity criteria. All right, so that's tonight's recap video. I'll see my members in the premium update. We'll talk a bit about what's coming up next in this post FOMC environment.